at a very crucial moment in history, if not a historic moment, we are fortuitous to be joined by India's Chief Economic Advisor, Mr. Anantha Nageswaran. Welcome to Times Network.
Thank you. Thank you for having me on your show.
Sir, let me begin by asking you that for sure this deal is a very big breather or a very big relief for the entire world. But for a large crude importing nation, and of course there are other issues like, urea import and other related imports, this certainly comes as a very big relief.
Undoubtedly, it is a big relief, but the urea prices had started declining even before the peace accord was agreed upon. In fact, the global price of urea had dropped below the pre-conflict levels, below February 27th levels already, even the week before. So it was a good thing. But definitely the crude oil prices, spot prices have come down to near $80, and in the case of West Texas, below $80. For us, West Texas doesn't matter as much as Brent crude prices. So overall, I think both the sweet and sour crude, the curve has come down, not only the spot, but also the futures prices. And definitely it augurs very well for us under the circumstances compared to how we looked at things 1 month ago. Definitely, this is a much better situation to be in.
And for sure, all of this will have a bearing on the strength of the Indian rupee as well, because
that's right.
It was getting hammered because of a lot of factors beyond the control of either any government or possibly even the economists.
Absolutely, that is true. I mean, because Indian rupee was not the only currency that was underperforming against the US dollar. If you look at the last 12 months, many Asian currencies have performed as bad or even worse than the Indian rupee. Whether you look at the Philippine peso, Indonesian rupiah, even the Korean won, Japanese yen, because all countries that were deemed to be big energy importers had been performing badly, and because of uncertainties related to trade last year, and then followed by this conflict, etc. So Asian currencies in general had underperformed. India was not an outlier. But this definitely will help. And also, if you noticed, the Reserve Bank of India has started publishing monthly numbers on balance of payments from April. And April, in fact, India had a current account surplus. So I think overall, the as you said, the oil price reduction and the measures announced by the Indian government and the Central Bank, Reserve Bank of India on June 5th, the government of India reduced the withholding tax and removed the capital gains tax on sovereign bonds by non-resident investors. RBI announced a new deposit mobilization scheme, dollar swap arrangement. So all these things, plus the peace accord, all things together, I think will definitely put a floor under the Indian rupee.
Dr. Nageswaran, I mean, with the strength of the Indian rupee and this conflict coming to an end, there are a whole host of industries also which stand to gain,
Yes.
If you from plastics
Yes.
to glass to steel, a whole host of industries.
And undoubtedly, in fact, it augurs very well for industrial production, because this conflict and the impact on energy price would have kind of diluted the impact of the free trade agreements we have been signing with multiple countries and regions in the world. The UK agreement and the EU agreement should become operational this year, and we will have the opportunity to have access to labor-intensive manufacturing and services goods in those markets. And the higher energy price would have kind of neutralized the impact of being able to export in zero duty access to these markets. Therefore, having this peace accord and the reduction in the oil price coming in at this time is actually a good thing for these sectors. And they can now take full advantage of the market access that these agreements now give us.
And when you say fully operational free trade agreements, so to say, you also think that they will also act as a large, coming out of this crisis, of course, I mean, industry has also been hammered because of these crises.
Yeah.
Coming out of this crisis, it will act as a further wind in their sails, further fillip to them so that they can utilize their full capacity, so to say, to produce, because right now production capacities have also been curtailed.
I think
in a number of sectors.
I agree, but they may not be adding capacities. I'm not sure the capacity is. What you mean is capacity utilization may have come down.
Yes, I mean to say that since sometimes there was labor shortage or the raw material shortage.
Sure, I think those issues will now become definitely ease quite a bit. Now, when I say the agreements becoming operational, which means Parliament, the European Parliament has to give its consent to the India EU agreement, and the UK Parliament British Parliament has to give its approval. Then the agreements become operational, active. That's what I meant.
Okay. So, but I'm saying that certainly will add
Oh, undoubtedly. So these are all positive developments, and I think these positive developments in the free trade agreements might have been diluted by the continued high price of oil and the other inputs and the feedstock, etc. Oil, natural gas, fertilizer, and then the resultant impact on downstream petrochemicals, etc. But now the fact that assuming that these numbers, the current prices hold, and the peace accord holds, then I think this particular crisis impact, then maybe now it becomes a matter of history. Yeah.
Well, I read this headline before I came to this interview as well. You were saying this with a caveat. Why this caveating, Dr. Nageshwara, with that? This caveating about if the peace accord holds.
Yeah, I mean, I know I'm just being in the light of the kind of uncertainties we face in the world. I'm just trying not to count my chickens before they are hatched. As simple as that. Just that we are now being conditioned by successive uncertainties to be cautious in a world where things have become very, very uncertain and fluid. So I'm just being cautious as a matter of routine. Yeah.
And do you think that those number of uncertainties starting from Ukraine-Russian war and then
yeah.
Eastern war have also taught us the fact that there are a number of, or possibly reinforced the fact that there are a number of factors, howsoever well you may be doing internally as an economy.
That's right.
There are a number of factors that are completely beyond your control.
I mean, you're absolutely right. That's always the case, that you have only control over your policies and your decisions internally by the private sector and the households. What they do, all of these things are at least within domestic sphere of influence. But external factors were always like that. They are exogenous. But it only tells you that we need to kind of do much more on domestic, not only policies, but also on domestic attitudes towards investment, towards research and development, towards creating, strategic buffers, and towards becoming resilient or self-reliant in some critical areas. So all those things have now acquired a sense of urgency and significance than what might have been the case, let's say, a decade earlier.
Or possibly pre-Ukraine, Russia.
Yeah, pre-COVID or whatever, yeah.
Dr. Nageshwara, again, coming back to this conflict, minus conflict territory, do you think that, and you've spoken about it, that research and development, particularly in this country, have always traditionally been our Achilles heel? And despite knowing the value of it in a world that is now being driven by high-end technology like AI, we are still very miserly in terms of investing. I'm not talking only of the government investment. I'm talking of the overall
economy. Yeah.
Yes.
No. I think, in fact, if anything, first of all, I also understand that some of these things are probably we are undercounting what we are spending, and I don't. From what I gather, I don't think the way other countries report their R&D expenditure and we may probably not be including certain things in the R&D expenditure. So we may be undercounting it to the extent of between 0.3 to 0.5% of GDP. So, but that is still minor, because even if you do that, we will still be on the lower side. So the point is well taken.
Or the lowest side possibly amongst the growing.
I don't know. I can't tell you off the top of my head, but that doesn't matter. It's not about a matter of comparison. It's about what we need to do. I think the thing is, yes, we have not been investing in R&D as much as we should be, given our size and given our needs, etc., which is what continues to keep us dependent on imports. All these things are well known, and I think it's now probably a sense of realization and urgency may be coming because of global developments and because of technological developments, that we have to raise our game with respect to R&D. And the government has taken some very concrete steps. We have announced and operationalized the Anusandhan National Research Fund and the Research and Development Innovation Fund, and the government will be supporting both of that to the tune of about 1.5 lakh crores over 5 years. And most of them now have a proper leadership and the governance structure. And if they can catalyze private sector investments, then I think we will be having a very different picture, a positive one, on Indian R&D 5 years down the road.
And apart from R&D, which obviously is directly tied up with the major technological boom, on which also again you've been speaking very interestingly, very interestingly on the minority side of the popular opinion or the expert opinion, that is AI. You've been saying that AI investments have been in a bubble. Why do you say so, Dr.
Globally, I'm saying, the kind of numbers that are being used, and in relation to the revenues that these companies are generating, and also the very circular nature of the investments between the same companies. These are all the reasons why I kind of said there could be a bubble, and I'm not the only one who has said that, by the way.
Yes,
Quite
you're
a few
certainly not
people,
the only one.
quite a few people have said that in the global market, in the global context, and the same thing happened during internet. The phenomena is real. But what is playing out in the financial market could be a bubble. So there are two different things. One is not saying that the very evolution of AI is a bubble. No, what is playing out in the financial space could be a bubble. That's what we are talking about here. So that is why I feel that the true potential or the limitations of AI can be discussed only when this bubble diffuses. Then we will have a more objective discussion. Because right now, those who are invested or those who want to invest want to believe that this is not a bubble, and therefore they talk up the upside. But there are downsides also, uncertainties with respect to labor market, security dimensions, etc. There's so many things that we don't have answers to, and I feel those answers and those questions are not being discussed in a objective manner, partly because there is a lot of impact or subconscious impact of the financial market implications there. And once that is gone out of the system, then we can have a more objective conversation on what AI will do, not only for India but also for the society in general globally.
But then, Dr. Nageshwara, one aspect of AI is certainly visible. There is a sovereignty aspect, which we saw the US withdrawing certain models. That is one aspect. But the financial market aspect,
Yes.
a lot of money is actually chasing AI technologies. And that is why many experts also say that our markets
Yeah.
have suddenly started to underperform. And a large class of investors
Sure.
today is getting impacted by it.
Yeah. No, that is why I feel that once this bubble out of the way, then I think a realistic appraisal of the Indian markets will become possible. So, we were not in the front end of the internet era also. But in the 25 years later now, we have utilized internet very well. Financial inclusion, digital public infrastructure, using it for health, education, multiple and financial products. We have used it, we applied internet very well. I think the same situation will happen, that India will apply AI and generate use cases, as they say, or applications for the whole world. And then India's role in AI will be viewed differently. We are not there in the front end or in the infrastructure space. And I think the fiscal limitations are also there. And Indian corporate sector also didn't think about it as much as, ultimately, if you look at it, India is not the only country that you can say underinvested in the AI infrastructure. Apart from USA and China, many other countries in Europe and Asia are not very much in the play as far as AI related investments are concerned. So we are not the only ones. But I'm sure that a year or two down the road, we will be talking about India and AI in a much more objective and different light than what it is being talked about today, where it is, India is kind of being dismissed in the AI space. I think that might turn out to be extremely wrong, pessimistic, and premature one year down the road.
And Dr. Nageshwara, also some in our neighborhood, I mean, in the East, in the Asian countries themselves, have drawn a lot of money from the AI investments into their markets, which possibly again is having an impact on our markets. You think, this all has to come down to some kind of proportionality or rationality, then markets to take the natural course?
No, actually, even countries like Korea, which have a very good semiconductor presence, in fact, foreign investors have fled from that market. Actually, that is one of the reasons why the Korean won has also underperformed against the US dollar. So I think it is very difficult to explain all of this in a consistent, rational manner. So it is, I mean, if one thought that Indian market was not a darling of investors recently, because we don't have an AI play, we don't have semiconductors, etc. But the market like Korea, which has semiconductors, and Hynix and Samsung are all actually contributing in a very big way to
Big players,
to the AI infrastructure. Even that market is not exactly favored by FIIs. They have been exiting, and that is why the Korean won has also been under pressure. So there is a lot of things, a lot of moving parts that are not that easy to explain. That is why I felt this bubble-like mentality of focusing only on few dimensions of AI is coloring the discussion. And once that is out of the way, then we can have a more logical and calmer conversation about where each country stands with respect to AI.
Um, Alongside AI, Dr. Nageshwara, one aspect that is very closely linked and can have a very big impact on a country like India is jobs.
Yeah.
Everyone is talking about
Yeah.
it. I spoke to one of the Obama era AI advisors, and he said that a job compression is actually very, very real possibility. But he spoke in the context of Indian IT sector. However, now we are seeing a much larger impact. Do you think that we should be concerned about AI adoption and job losses, and we should be preparing for it today?
No, absolutely. We should be concerned. We should be preparing for it, and we should be training our youth to participate in areas where we could actually add value, and also we should use AI as a supplement to human effort. So how it enhances human output, and that is the area in which we should be focusing on. That is one. And second, as we have been saying, we should focus on areas where AI cannot easily replace humans, and that relates to trade skills, care economy, counseling, culinary skills, and trade skills areas where AI cannot so easily make a dent. So these are two dimensions, but also the pessimism with respect to AI could be a little overdone, because we don't know honestly how quickly AI can replace humans, because the cost of applying or adopting AI could become very prohibitive for many companies, in which case they may be forced to slow down. And then we will also discover that, given the savings we achieve with respect to AI, that could open up investment in many other areas, necessitating more humans in the picture. And then there could be validation, regulatory compliance in all these areas. You may need the human in the system to verify the output, etc. So I think a proper picture will emerge only about 3 to 5 years down the road. But it is important to start preparing. But because some low-end jobs, which can be routine, daily, recurring jobs, can be replaced by technology, but that has been happening over centuries. Routine jobs being replaced by computerization, etc., have been happening. So whether AI will happen on a much larger scale, because it includes not only mechanical but also cognitive jobs, is a big question mark. But I think right now perhaps the pessimism is a trifle too high, not only in India but in many developed countries as well. So I think we may need to step back and look at it over a slightly longer period, in which case we may feel that we probably worried a little too much.
And that is linked to the fact that you have been advising the youth to move beyond the MBA and
No, I think the point is I was purely focusing on the AI impact.
yes.
Whichever sectors, I mean, look, at the end of the day, in any case, if you are in the top institution, then you will still find some employment which will work well for you. But instead of looking at second, third, fourth tier institutions, and if your job could be replaced by technology, then it will happen. So basically, it is all about certain skill sets which were in demand in a different era, globalization era, free markets, free trade, that require different kind of specialists and generalists. Today you need to focus on self-reliance, the indigenization, manufacturing, building buffers, AI insulated jobs. That requires a different set of skill set. That is the angle I was coming from.
And on manufacturing side, sir, I would want to ask you this as well. China, of course, is the global manufacturing factory. Globally, they are,
Sure.
they're the leaders. They will, of course, apply AI to their advantage. Do you think that it will blunt our attempts to become a manufacturing hub?
These are all very difficult to predict with any degree of precision. I think these are complex phenomena, and complex phenomena are notoriously difficult to predict. We couldn't have predicted India becoming such a big player in IT services 20 years ago, but it happened. So I think we cannot extrapolate from current trends. We need to be careful. We need to keep doing all the things to prepare ourselves, but circumstances will have their own way of evolving. So I mean, nature is not that easy to predict.
Now, let me come back, because we have to wrap up as well. Now, let me come back to the original reason why we are meeting Dr.
Right.
Ishwara, which is the 12 years of Mr. Modi's government and the economic performance of India during
Yeah.
this period. How would you, as the chief economic advisor, rate the entire performance of this period? How has it been different in terms of the trajectory that Indian economy
Sure.
has taken from the previous
Sure.
governments?
I mean, basically, when this government came to office in 2014, we had a double-digit inflation rate, we had a high fiscal deficit, high current account deficit, and a banking system in crisis. And the corporate sector was actively shrinking balance sheet because they had taken on too much of debt. And the boom of 2003 to 2008 had not exactly been put to productive use. If that is the case, India's manufacturing capacity would be much different now. That didn't happen. So in some sense, you can look back and say we probably didn't make as good a use of the 2003 to 8 boom as we should have, as economy as a whole. But therefore, that is the legacy of the not so good use is what this government inherited. But from there, it has sort of created macroeconomic stability, created a big boom in infrastructure, provided a supply side cushioning to the economy, which used to suffer from excess demand very easily, brought the banking system back on track into good health, and corporate sector is now in very good shape, good profitability, good balance
Will
sheet.
they also be investing, Dr. Nageswaran?
Government, sorry?
Corporate sector constantly.
Corporate sector
Investments.
spend the rest of the second decade repairing balance sheets, and in the third decade they will claim that they have been buffeted by one shock after the other. But considering that the overall investment rate in the economy is at 32% of GDP, it's a very decent one. And I think we also created the digital public infrastructure, formalized the economy, brought down the fiscal deficit, earned 3 credit rating upgrades last year, which hasn't happened in 18 years or so. So that is, and I think macroeconomic stability has also been one of the more important achievements of the Modi government over the last 12 years. So I think the record of the government has been to prepare its macro stability and its balance sheet strength and formalization to be able to undertake the kind of aspirational areas that we want to do in the next 25 years.
My last question to you, Dr. Nageswaran, before I let you go, is that do you think that our job generation capacity or job generation abilities need a further boost?
I think that is exactly what the budget of July 2024 focused on. I mean, and what the government has been doing consistently across budgets, deregulation, is also meant to give the flexibility to businesses to be able to grow their economic activity and create jobs. Deregulation is not something that is unrelated to employment generation. It is central to employment generation. If we deregulate and give space for businesses to grow, then they will naturally employ more people. So we talk about employment and then say skilling and incentives, education, etc. But all those things were announced in the budget July 2024, the PM Rozgar Yojana, apprenticeship scheme, PM internship scheme, and then the skilling initiative. But more importantly, the ongoing initiative of ease of doing business and deregulation is about making it easier for businesses to hire. So employment generation has to be and is front and central to the government's policy initiatives.
Thank you very much, Dr. Nageswaran.
You're welcome. Thank you for the conversation.